In this video, I'm going to reveal my complete strategy for trading and growing a small account. I'm talking about what mindset you should have, what entries you should be taking, where you should be taking trades, and why. And there's a specific way and specific things you have to be doing on these small accounts to A, maximize them, B, make sure you set yourself up to when you're trading bigger risk on bigger accounts, because that is the goal. So I'm going to break down everything and put it into a few steps here. Hopefully this will help you and excel you in your trading journey, especially if you're starting off with a small account. Alright guys, so we're going to break this into three different parts here. The first part is going to be small account mindset, right? So the right mindset you should be approaching small accounts, what goals you should be setting. The second thing is we're going to talk about the strategy of actually how you're going to trade on a small account, how much you're going to risk, why you're going to risk that much, what setups to look. We're going to talk about my favorite setup here as well, right? And then the last thing is going to be, okay, what's next? Progression out of a small account. How are you going to progress? What are you going to do with the money? All of that different stuff, okay? So that's the three sections we're going to split this into, and then we're going to take it from there. So the first thing is going to be about small account mindset. So whenever you have a small account, it's very important to understand, what mindset you should be going with. So we can classify a small account as small as $100 to, let's say about until $2,000 is considered somewhat in a range. Now, this is a big range, right? Now, what you have to understand is that there's two different mindsets. You're either opening a small account to flip, or you're actually going to build a skill that will make you more money. So we know in trading that the more money you have, the easier it is to make money, because you have leverage, right? You can leverage that capital. Risking 1% of 100K is obviously going to make you more money than risking 1% of $100. So understanding that is going to drastically change your mindset when it comes to small accounts, because when you're trading small accounts, you can't have the mindset that it's small. You have to believe that this is actually your real trading account, and the results you put on this account is going to determine your future on trading. So I'm going to list some few points that you have to have going into a small account. Is number one, this is your confidence building tool. This is to prove that you can trade to yourself and at the same time show consistency. Number two, it's not going to be heavy amounts of risk that you're going to be emotional, so you can learn to control emotions and learn how it feels to increase risk. Number three, you're going to be able to leverage this small account by proving yourself the skill in order to have access to higher capital, such as stuff as funded accounts, or to eventually, if you're earning, you can deposit more money into your own account, right? And number four is growth out of a small account, how you can leverage using high risk percentage to possibly somewhat flip the account. So that's the mindset going into a small account. And now I want to talk a little bit about the strategy that I would use for trading small accounts. Also, before we continue, can I remind you to leave a like and subscribe to this channel if you are enjoying this content. Definitely does support the channel, helps get this information out to more people, and lets you be part of this journey as well. So welcome to the channel if you're new, and let's get straight back into the video. So the strategy I would use for trading small accounts would basically be sticking to one entry model, right? You have to stick to one entry model. For me, I would say the best entry model to stick to is probably going to be setup one, right? That's what I call it. And this is going to be an image of setup one here. Now, setup one is one of my favorite setups, which is simply closes above or below a range to reach a next possible target here. We can see data on the charts. This is some of my data. If we go check setup number one, 81% win rate on setup number one, which is very, very good. And setup number one is the most common that comes in the markets here. You can see it happen here. You can see candles close below. This is a 4-hour time frame, happens on all time frames. But let's break down how to take setup one. So the number one thing you need in setup one is you're going to need clean trading zones. So what do I mean by clean trading zones? You need to be able to identify a zone to trade in. And what we need is clean candles. If we go ahead and look at a 15-minute time frame, this would be considered a trading zone that is clean. Let's say if we were looking for buys, okay? Now you must have said, oh, but we closed above and failed. Yes, we're going to get to that. But we need to be trading in zones which are clean, without support and resistance. We are going to use support and resistance as our target. Now, I do recommend you dive deeper into my channel and watch how to mark up the charts, because it's not as easy as ABC. But this is the strategy I would use, and I'd like to cover some of it in this video just to give you a taste, and also to kind of put some stuff in one video so you're not keep on jumping around. But once you have your trading zone, for example, saying that we're looking for, okay, this is our trading zone today. So we can take this example right here. I'm going to mark this on the chart, showing you that here is your trading zone. Ta-da! Why is this a trading zone? Because this is clean candles. CC, clean candles. which means that if price was able to move smoothly in the past, we can expect price to move smoothly in the future. Now for setup 1, what do we need? We need a support and a resistance. So where is our resistance? Here, right? We could even consider this as our resistance. And this is our support. And this is where you have to start to mark up. Your next target is going to be this next support here, right? Because that's how a support is marked. A support is defined by one candle closing bearish and the next candle bullish forms a support. Candle bearish, candle bullish forms a support. A resistance is the opposite. Candle bullish, candle bearish forms a resistance. So with candle bullish, candle bearish, that formed a resistance, which is why it's our next target, right? So if we're going and looking at the setup here, for setup number 1, what we need is we need price to close above or below that range following what? A bias. And a bias is what direction do you expect the market to go. Now, I have videos on my channel going in depth, but it's based off previous 4-hour and previous daily candle. A small hack for all of you guys on this channel is you can go ahead and get my Tradesharpe session bias. Look at this. Tradesharpe session bias indicator, it's free, and it's going to show you what the session bias is. At the time, a bearish bias means that we should be looking for sells. I do recommend you go watch how the bias is made. That video is on my channel. I do recommend you go ahead and have an understanding of what it is, but you can use the indicator. So when session bias is bearish, we look for sells. When session bias is bullish, we look for buys. When session bias is mixed, we can also look for buys and sells, which is where you guys need to do a little bit of homework and study about that. So in this scenario, like I said, with setup number 1, what do we need? We need a close above or below the range. Do we get that? Yes. What time frame am I entering on? 15 minute. This can work on 30, on 1 hour, whichever one closes first. 15 minute, go ahead. 5, 1 minute, not going to be the best, not enough confirmation. So we get a 15-minute candle closing below the zone. We can take a short position. Stop loss can go above the high, and target can be your next zone. There you go, right? And that is your trade there, setup number 1. Very clean and simple. Go ahead and look at that. We can compare images and see, do we have a close below the range? Yes. Does the next candle make a top wick? Yes. Does it break the low? Yes. That's our entry, and we can stick to this. So building confidence, building data, journaling your trades, and taking this on a small account is going to build what? Confidence. So now I want to talk a little bit about how much are you going to risk on one of these small accounts, right? So now we know a bit of the strategy. I would recommend you stick to that, take those trades, have something that's very focused to allow you to build confidence, data, and a way to have fundamental standpoint in trading, right? To make sure that you can always have somewhere to fall back on a fundamental standpoint here. So the goal is to think about the future. You don't want to always be trading on a small account, trying to flip your $1,000 account to $2,000 just to make $1,000 a month. Your goal is long-sighted. This small account is going to be proving to yourself that you can trade live and be sustainable to allow yourself to trade that bigger capital. Whether you're going down the funded route, whether you're going down whatever route, or you can look to grow that small account into some capital, which is a more long-term approach, which I always recommend having a personal account. So both ways, you will need to grow your accounts, whether you're looking to pass funded or just to grow your small account. So start with 1 to 3%. When can we start risking heavy amounts here? So obviously it's going to be boring. Let's say we have a $1,000 account. We're not going to be paid much risking 1 to 3%, $30 a trade. According to the account size, it's insane gains. Now, without you having confidence, without you having experience, it's going to be very hard for you to risk heavy amounts without risking blowing the whole account. Because this is going to be something where if you start risking $100 on a $1,000 account, you're going to start to see the account swing. And if you're down $200 on one day, you're not disciplined to take more than 2 trades a day. You're not disciplined to revenge trade. Guess what? If you're risking $100, you're going to lose because you're going to double down, boom, $1,000 account gone. Now you feel really bad. You've learned nothing. You've not improved in your trading, and your small account is gone, so there's no use. So this is where you have to leverage risking maybe a monetary amount that you know won't affect your psychology. So I could risk up to 5% on a $1,000 account, which will be $50. That $50 for me is still money that I can do something with, but it's not enough to cause my psychology to go bad, for example, right? So what you do is then over time that would grow and you start to compound your account. Now, when you compound account, your 5% risk is going to slowly add up. So if you started with a $1,000 account, over 1 month you were able to grow it to, let's say you were risking 5% because you got confident, and risking 5% you were able to, you know, bring it up to, let's say 1,300. Now next month you can risk $75, you bring it up to maybe 1.8k, right? And now you can start compounding, and this is a slower approach, but over time this account will probably come, you know, to bigger levels, and you can just keep doubling down, not withdrawing money, but just increasing risk. And that's how I would personally approach trading small accounts. So I hope that this video has helped. I hope that you know, this could be of use to you. If it has, be sure to leave a subscribe, be sure to leave a like. I appreciate every one of you watching this video. Join us on this channel and hope it can be a good part of your journey. With that being said, take care, trade sharp, and hopefully catch you guys very, very soon.